And welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at that most recent price action and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, well, what are you waiting for? Check it out, linked in the description down below. If you're watching us on X, give us a follow and make sure you give us a repost. It would just help push the content out to more like-minded individuals. Okay, guys, let's waste no more time. Let's jump right down into the 1 hour time frame. So here we have Bitcoin paired up with USDT using the BitGet spot exchange 1 hour time frame. As we were kind of talking about yesterday, we kind of saw us with a move to the upside. It's just pretty typical Sunday stuff, liquidating any potential short positions before we go on down. And you can see here that our short position that we were kind of talking about, we'll probably talk about this a little bit later, but around the $26,070 level, little move upwards, so better entry could have been had, and then straight into the profit range down here. So let's go ahead and review our kind of patterns, because we were expecting a move down towards this yellow box area, basically 25,485 to 25,603. However, the move to the upside would have just changed just a little bit here, our expectations on where we are likely to go down to. So let's go ahead and just adjust for the recent price action, just calibrate this back in to the target range. So it's actually a little bit higher now because of that move up. So it comes in at 25,545 to 25,665. Okay, so that's going to be the range that we are looking for just down here. Now, we are in an oversold area, so it's possible that still we have another move up before this happens, but for now, that's kind of where we're looking at. We are, of course, still also targeting this one down here a little bit deeper at 25,172 to 25,382. Essentially here, what I'll be looking for is a bounce from the first yellow box and then jumping into the second one at a later date. Essentially, we're looking for a big three-wave pattern to kind of get us there. And it's possible that this is going to take a little bit longer to kind of play on out. It's also potentially possible that it's down here, but I suspect it's actually up this end. So I'll leave it like that for now. And then, of course, we are still heading down towards our fifth wave target low, coming in at 23,287 to 24,113. So there's a lot of things to take in there. Let's zoom out so we can kind of see. We're looking for a diagonal based pattern, I believe, to finish off this fifth wave movement. Okay, so we're looking for 3 waves down, 3 waves up, 3 waves down, another 3 waves up, and then finally another 3 waves down. Okay, an ending diagonal. Now, obviously, it's taking a fair amount of time to get here. We might find that there's going to be a straight drop at some point, and then a bounce up of significance, then back down again, and so forth. But for the most part, nothing here has really changed. It's preventing us from coming down to the 23,287 to 24,113. Essentially, that's what you're looking for. If you want to be bullish on Bitcoin right now, then what we need to do is we need to break the structure that we're currently in so that we can be bullish, right? At the moment, we haven't broken that structure, so our expectations are still the same. They remain that we have to go down into this fifth wave low at 23,000 to 24,000, right? And so what do we need to do in order to break that? Well, we need to come up higher than 29,109. We need to break that wave one swing low point. We can, of course, continue rallying up in the wave 4 and not break that structure and just make our fifth wave even deeper. That would be interesting if that were to occur, but something that would be a little unusual at the same time. But for the most part, we can see that everything is right on track at the moment. Momentum-wise, we've got an interesting spot on the hourly chart. It is down in the oversold area, so I'm expecting maybe a bit of a move to the upside. After that, probably back down again. Unfortunately, just a lot of boring volatility, it would appear. We've had the breakdown at the moment, expect a bounce and then another move to downside. I think that's kind of how I'm reading it at the moment on the 1 hour time frame. Let's go ahead and take it into the daily time frame. Okay, so the daily time frame is still tracking this 5 wave move. Okay, so that 5 wave move that we're talking about on the hourly chart essentially is just the wave 3. Okay, and what we're actually doing here is basically looking for a wave 5 of the wave 3. That's what's happening on the hourly chart. And you can see here on the daily time frame, it's a big 5 wave drop to the downside, and that fifth wave target is going to be down here at 22,659 to 23,426 approximately. Okay, and I say it's approximately because actually this is just an estimated target, because we haven't completed wave 3, we haven't even started wave 4, and therefore we cannot really predict out where wave 5 is going to go just yet. This is an idea as to where it can go. And again, because we haven't completed wave 3, this can reverse on us. Anything higher than 28,588 would basically prevent us from having this move to the downside. So we know where those invalidations are. We know where we would kind of basically get a reversal in the market. And we know what the bulls would be targeting to kind of break that structure to the downside. Failing to break this structure to the downside essentially means that we are probably going to be revisiting the significant lows that we had previously, sub $20,000. And there's lots of speculation as to kind of how low that could go. Okay, so just bear that in mind. Now we can see here that we have the 50 EMA and the 200 EMA. At the moment, the 50 EMA is above the 200, so the short-term price action is greater than the longer-term price action. However, there's a steep downturn on that 50 EMA, meaning that we are likely in the next week or so going to see it cross the 50 EMA on the daily time frame. Sorry, across the 200 EMA on the daily time frame. And that's going to be seen as another bearish tell. So we want to be a little bit cautious there. But again, those EMAs are only showing you what's already happened, and they're not predicting the future, but people are going to react negatively to it. So do expect a little bit of volatility when that occurs. Ultimately, the structure on the daily time frame remains very much the same as it has been for the last week or so. And that is that we were expecting further downside. Our stochastic RSI is actually just above the oversold area. It can dip back down from here. There's no rationale as to thinking it needs to stay where it is. Momentum just isn't really behind the price action at the moment, so it's kind of bouncing around a little bit on the stochastic RSI. We are expecting, as I say, to complete that fifth wave on the hourly, which will complete wave 3, and then we'll see a significant bounce into wave 4, which will take us probably up towards the 200 EMA, and then we'll come back down later. So again, there's a lot of things to happen here on these timeframes. It's not going to be quick on the daily time frame. I think we've got weeks to months to kind of endure here. So let's go ahead and bring this up into our weekly chart, right? Because yesterday we had the weekly close. We can see that the bulls and the bears were fighting it out, and we got a close right there in the middle between the 50 and 200 EMA. So again, remains neutral, as in the market's still trying to decide. The bulls were trying to basically bring us above the 50 EMA, and the bears were trying to bring us down below the 200 EMA. And so we kind of sit right here, just kind of waiting for something to happen. Ultimately, it looks like the bears are back in control at the moment, looking to try to bring the price back below that 200 EMA. The 200 EMA currently sits at 25,672, with the 50 EMA sitting at 26,878. So for now, that's kind of where it sits. Now I'm going to zoom out of here just for a moment. This is Bitcoin USD on Bitstamp. Okay, and you can see that I've analyzed this a little bit here in one of the previous videos. We have connected all the peaks, okay, and we drew a white curved line across those, and then we connected all of the lows, and we drew another curved line underneath those. We tried to keep the distance between the peak and the low consistent throughout, right? We wanted to make sure it was a nice kind of curved line all the way through. It wasn't like narrowing down, wasn't doing anything like that. It was just looking for consistency between the historical points of reference, right? And for the most part, what does this show us? Well, it shows us that maybe we haven't actually bottomed out yet, because this curved line is actually indicating that a bottom should kind of approximately be at around that $11,000 to $12,000 range. So that would be a new lower low for BTC. However, there are some analysts, specifically some Bloomberg analysts at the moment, that are saying and suggesting something that we've been talking about for a while, although more spoken about in our Discord server than on the YouTube channel, just simply because I don't think people want to hear it. But there is the possibility of slippage all the way down to sub $10,000 under a 3-wave corrective pattern like this. Now, there's many different reasons and catalysts behind what could do something like this, but for the most part, this is something that some Bloomberg analysts now are also kind of saying is a true possibility. 10 to 7,500. I think we even see slippage down to lower than and 7, and more towards the 6 and 5, with a really bearish situation of 4.5. Now, do I think that's likely to go down on that low? No, because the demand's going to be absolutely insane. There would have to be a significant amount of supply to drown out that demand. That being said, though, there's a lot of catalysts that could cause a massive shockwave through the ecosystem, considering that a lot of the supply is actually held at the retail level. That means that you might see a lot more emotional reactions to price movement than we had seen historically. So I think it's going to be an interesting one. I'm not saying that we have to have this move down here. I think it would be nice to kind of have consistency across the years if we did tap down on the $11,000 to $12,000 range. But if we did to come down to 10K, for example, or lower, then I think that's going to be a massive opportunity for so many people. Unfortunately, I think a lot of retail investors will get wrecked in the process. I reckon we're probably going to see a 30% move of wallet reduction size. So, for example, there's one Bitcoin. In fact, actually, bring up the data. Let's just do that. Okay, so membership.cheekycrypto.io is a membership website. We do a 7-day free trial across all the plans, and the plans are pretty decent in my opinion. I think when you sign up to this on the 7-day free trial, I don't think you're going to want to quit or kind of want to cancel your subscription. So, that's my opinion on it. But of course you can. 7 days free trial, sign up to it, go to your profile area and cancel if you don't want to continue, but I think you will. There's a lot of things that we have to offer, and what we're going to talk about today is going to be one of the big perks, which is the data, which is on-chain data for Bitcoin. I'm just going to come on over into this and load it up here. So we have all the general stats, some interesting things with hash rates and stuff like that. I'm not really going to go into the detail of that right in this particular video. I'm going to just focus in on the wallet counts and talk about that one Bitcoin level, right? So as of the 26th of August, there were 1 million wallets that had over a single Bitcoin, right? And so there's 1 million Bitcoin sat here, right? It's more than 1 million, but we're going to call it simplistically 1 million Bitcoin sat at this retail layer. Now, if 30% of those retail investors get scared and shaken out of their positions, just 30% would be 300,000 Bitcoin just going into the ecosystem. That's a lot of Bitcoin that could see a significant downturn in the price action. But it's not just this one layer that's potentially going to be a problem. We've got 10 Bitcoin and there's 156,000 wallets there, so 1.5 million. Okay, and again, if you were to see a reduction there of, let's say, 30%, you're going to see another significant amount of Bitcoin just eking into the market. Likewise, at 0.1 Bitcoin, there is 4.4 million wallets, right? So again, we are seeing a very significant amount of Bitcoin sat at this retail layer, and that could be pretty detrimental to Bitcoin's price action should there be a sharp downturn in price that causes panic. Because if we do see panic at that retail layer, we're going to essentially see a lot more selling pressure and a lot more Bitcoin supply entering into the market, which is going to completely destroy that price action and basically just push the price even further to the downside. Okay, and I think that's ultimately what the whales are waiting for, right? They've been aggressively selling for such a long time here. I think essentially what they're waiting for is that selling pressure and for that cascading effect to occur once some pressure has been applied to a specific level. So it's an interesting one to kind of take a look at, because we take a look at the price charts, we can take a look at everything else that's going on from the on-chain data point of view, and ultimately our mind just goes to, okay, what is the incentive for these retail investors to be able to hold, right? We've got interest rates that are rising, inflation that is high, essentially making it very, very difficult for people to kind of survive on the day-to-day. More and more people every single day seem to be just going paycheck to paycheck, with savers accounts depleting and debt at all-time highs. It really is a struggle to think that there's going to be enough liquidity in the market to sustain their current lifestyles, and as such, maybe there's going to be a bit of selling pressure of other assets in order to keep food on the table, to keep a roof above their heads, and to maybe sustain a certain lifestyle that they had been accustomed to. And so I think there's many reasons why Bitcoin might get sold at that retail level, and it is an area of concern. Let's go ahead and talk about exchanges, specifically liquidations in the last 24 hours. $3.8 million of Bitcoin liquidations in the last 24 hours. Binance was the exchange at the top of the list at $1.39 million of liquidations. More balanced this time. Long positions were 59.34% and short positions were 40.66%. Binance was 35.9% 25.69% of all liquidations, OKX 19.31%, 𝗕𝗓𝗪 18.18%, and BYBIT 11.49%. Ultimately, anything unusual here? Well, I'd say the Binance is a little bit higher than it has been for a while, but that's not terribly unusual. Binance is usually at the top of the list anyway. OKX has kind of taken the top spot recently, and so did 𝗕𝗓𝗪. But otherwise, there's not too much unusual activity here. The liquidations are really small in comparison to what they have been historically, so we're not overly too concerned. And yeah, it looks pretty much normal. Now, when it comes to exchanges, as you guys may know, BitGet is my go-to platform. It's a platform that I use for 100% of my leverage positions and 90 to 95% of my spot positions. If you haven't yet signed up to BitGet, I think you're missing a trick. I think it can quickly become your go-to platform as well. There's an affiliate link in the description down below. If you do use that link, you are eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. Ultimately, though, guys, I think it's a good strategy to sign up to as many different exchanges as possible. And this will allow you to kind of have the most flexibility in the bull market. You do not necessarily know and what exchanges are going to be around, which ones are going to survive the bear market, but also which ones are going to actually be online under such demand. Some of these platforms basically prevent you from logging in, and so it's very, very difficult in a bull market to liquidate your assets if you cannot get onto your exchange. So a good strategy is to make sure that you have exposure to as many of these exchanges as you possibly can. Sign up to them, use whatever kind of offers that are out there at the moment. There's many different offers that we've got with ByBit here and BitGet as well, what you see on the platform or see on the screen right now, all the way through to Binance, Coinbase, KuCoin, Gate.io, Crypto.com, 𝗕𝗓𝗪, and so forth, right? All of these platforms, I have accounts with them. I'm registered with them. I understand how to deposit fiat, how to withdraw fiat, how to deposit crypto, how to withdraw crypto. Do I need to link a bank account? Do I need to do KYC? All these things are good things to do in the bear market, not so good to do them in the bull market. It just adds to your stress levels. Essentially, get yourself set up for the future by signing up to BitGet, linked in the description down below. There's also links to other exchanges down there as well, and I urge you guys to kind of sign up to as many as you possibly can. But do bear in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts and in the crypto space as I personally see it. If you do have access to a financial advisor, probably should consult those guys. They probably know better, right? I'm just a guy on YouTube at the end of the day. Right, let's go ahead and move on over into some trades, or the trade section of today's video. Specifically, we're going to be talking about the trade setup for Bitcoin here, because I still think we're on track, but I expect that we're probably going to start seeing a move upwards in a moment. So I think we would probably be better off kind of closing out of a short trade if we were in one. Again, this is just theoretical, so I haven't had the time to actually trade. I'd probably come out of the trade if I were in one, and then I'd wait for another better entry, because this is kind of a rinse repeat scenario here until we kind of get the right structure. Essentially, I would be looking to short the market again as we approach these highs one more time. We'll be looking to probably test the 50 EMA, maybe a little bit more. We'll see how price reacts there. If it does come to the 50 EMA, we have a nice position to enter. Approximately $26,050 would again put the stop loss has to be quite high here, more around the 26,317. Take profit, we'd have to target out 1.5 for a decent risk reward ratio, so it would be down here at 25.646. Again, there could be a better entry here. The better the entry is, or the higher the entry is, the more profit and risk reward ratio that we'll have to have here, or would like to gain here. So we'll kind of have to see how price reacts at the 50 EMA and higher and so forth. Ultimately, we probably do not need to use too many X in leverage here. I'd probably look for a 10X on this one, maybe a little bit less. You know, it's got a big stop loss, and that's going to basically mean we want either high margin or low leverage. So probably on the lower leverage side to start with, and we can obviously increase things later, and that would kind of balance it out a little bit more. Or alternatively, we wait for a better entry. Ultimately, we are looking for a move to the downside before we can long, so I wouldn't be long in the market until we kind of finish out some of those structures. Again, we could try going long and bigger moves later, but for now, I think it's best to kind of just think about shorting the market here for BTC. So that's kind of my approach to it, but as I said, I'm not a financial advisor. If you do have access to one, you should probably consult a financial advisor. I'm going to leave this video right there though, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.